Hello, 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 everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iagino, who should be on tomorrow afternoon. How is everyone doing? Hey, AP's World, yes, happy Boxing Day. That does not mean we practice our MMA and jabs. Very few people know what Boxing Day is, at least in this country I've found. Patrick, good afternoon. Hey, Coco. I tried sport betting and I lost 30 bucks. Well, that's not bad, 30 bucks. So I guess you're not a big sports bettor. Hey, CD, welcome, 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 everybody. The day that's the official Christmas holiday. So lots of people are still off, still recovering from Christmas, but we have markets to prep for. Will Santa show up this week or not? For the Santa Claus rally, we'll go over some key levels. We're not going to make this super long because it's still a holiday time. Also, probably the live streams this week will be a little shorter, to give everybody a break, take some downtime. But we will have live streams. What's today? Monday. So Tuesday, Wednesday, Thursday, Friday, morning and afternoon/evening. So be prepared for that. Hello, hello, Christoph. You can't say Grand Rising since it's in the afternoon. All right, bunch of the regulars here. People hiding out in the background too. So should be a little quieter. Let's see. There was nothing going on today. Markets will open. The futures are opening in just under 2 hours. So we'll get ourselves all set up for that. Take a look what's unfolding this week with the economic releases. So starting tomorrow, we got retail inventories at 7:30. We got the home prices at 8. That's going to be very minor. The bigger things are going to be retail inventories. I'm going to stress, besides some regional Fed indices and then your unemployment numbers, there isn't much going on this week. And there's pretty much no market moving info over the weekend, which was a good thing. So it should give us a pretty clean slate just to use pure price action. I am paying attention tomorrow morning, 9:30 Central, the Dallas Fed Manufacturing Index. Not that it's going to be super market moving, but I want to see where this comes in, if it goes into deeper contraction or if we have a bounce back. Remember, this has been into contraction since what? May? So that is quite a while from the Dallas Fed Index, but it's going to be interesting to keep an eye on that for Wednesday. You got the mortgage stuff coming out at 6 a.m., very minor. Red Book, 755, something I like to look at, but it's not going to really be market moving. Home sales at 9, not going to be market moving. Richmond Manufacturing and Services Index, not, unless this is a really off number, it's not going to be market moving, but I'm still watching for the contraction or if services does pop back into expansion. Remember, above 0 is expansion, below 0 is contraction, forecast to 1. So that will be interesting. Do I still believe in the Santa rally? Well, what do you mean, do I still believe in it? Again, it's not guaranteed. I went over the stats, but I'm waiting for some key price action levels to be triggered. Then I got to go with the probabilities. And if they're not triggered, then I'll go with longer term, we should have lower probabilities if we have valid setups. The stronger period is also the first week of January. So we're just going to have to see. But that's why we follow price action. Because there's not a guarantee. It's not 100%. It's about a 60-something percent for a Santa rally, which is technically between Christmas and New Year's. Then you go into the January effect, the first week of the year. All right, Thursday. Now remember, for all the oil traders, the numbers that would normally come out Wednesday are shifted today, so those are on Thursday. Initial and continuing jobless claims are the only thing to really pay attention to, besides if you're an oil trader. But 7:30 as always, so that's what we'll be watching for on Thursday before the market. Friday, You got Chicago PMI, again, another regional index. So, forecast 42. Previously, remember this huge drop. Remember also when it had dropped this much, was not good. It was I think it was 100% reliability since the 70s for recession coming up. So that's where we sit. There's not a lot of like earth-shattering, market-moving info. Hey, Chris. So, stock market map, just a reminder, oil was up and oil and gas stuff was up big on Friday. The strongest mega caps were Amazon and Google. Tesla was still down. Overall, the sector, the biggest mover both for Friday and the week prior was energy. And you still see over the whole week, technology and consumer cyclical were not faring so well. And interesting enough, so far for the month, look at that. The only thing, utilities are flat roughly. Healthcare is the only thing that's reliably eked out a gain. So that should tell you something. Fed, 65% for the 25 basis point increase still. Fear and greed still in fear mode. So we can watch that bounce. For the point of completeness, and this will probably be the last time I'm showing it this week, there is virtually nothing on earnings. Nothing that's even going to matter. So unless you're trading Green Tree Hospitality Group, Cal Maine Foods, or can't pronounce it group, you don't have to worry about stuff. So that's also off the table. Also, going through Friday, everything is regular hours, including Friday. Regular closing time. So we'll call this back up at the end of the week, but just for the point of completeness, everything shifted again next week. So instead of our Sunday, we'll be doing a Monday afternoon session again. We get another nice little break. And then, no more break. All right. So let's take a clear look. I have the upside and the downside levels being marked. 38.70.50 is what we were watching for on a close for Friday. We closed slightly below that. 3 ticks below it to be exact in the S&P. So we didn't get the probability shift. So that's the level I'm paying attention to tomorrow. Why? Because we get the close above there. We should retest the high area between about 39.03 to 39.18. We get a close above 39.1975. That's the next key level you should be marking down. On a closing basis, we trigger a short-term bullish pattern. Key levels 39.78, 4,007, 4,036. Do not ignore the 200 right in the middle. The flat 200 simple moving average coming in right about 40.20. The main targets I will be focusing on is first, second, and the simple, 200 simple. There we go. There we go. So if we break down on a key closing level, I am utilizing the close from Monday the 19th. 38.45.50. A close below there, I will start targeting the breakdown. The breakdown. So, the key areas for the breakdown are roughly about 38.04, 37.88. Minors 37.72 from these harmonics from the high to low on Thursday. And now we have a, oh boy, this is 1, 2, 3, like a quad harmonic cluster, 37.55 quad harmonic cluster. So that's my major target to the downside, followed by 37.09. But what I will be watching for to start targeting that is a close. Why am I focused on that one key close? Because that is the lowest little close of what formed this double bottom pattern. Little thing there. So that's what I'm watching on. Although going in, if we start selling off, an early warning sign is if we break below Friday's levels. Hey, Josh. Hey, Options 22. Thank you for the big holiday. Hello. Good day, everyone. Hey, Mike. Thank you. 8 bars high to high, 8 bars high to low. There's a nice little bit of information for you. So was it 1, 2, 3, 4, 5, 6, 7, 8? Yep, 8 bars high to low. So should we get 8 bars high to high then? That will be interesting. How about low to high, Mike? All right, so there's the levels. Now remember, daily cycle's still climbing. Weekly cycle's still falling. So we have a mismatch of cycles. However, it looks like they should start lining up again for the first week of January. So mismatched cycles. It's why for me to get really into a standard rally, I need these doubles to trigger. If the doubles don't trigger, it could just be Mr. Yuck. Mr. Yuck markets pretty much sums up the markets for this year. By the way, we have a shorter term double on the NASDAQ. There is no larger term double. That would need a 4-hour close above 11,143. Targets 11,256, 11,313, 11,369 area. That's the only thing, and that's not a major pattern. That could be triggered and run out within a couple days. And there is no bigger key area. Because also what's interesting, if you do close above the highest high here, 11,389.75, you're slamming into the daily rotation zone in the prior breakdown area. So you're slamming into major overhead resistance and going into the daily rotation zone. Look, I'd be watching for the rotation lower then. So the only short-term bullish pattern would take us back to the daily rotation zone. Other than that, the low close is from Thursday. So we get a close below that, retargeting the low area first Thursdays, then intermediate 10,805, then major. We have a huge cluster area down here, anywhere from about 10,720 to 10,740. Those are my key levels to the downside. If we do break below that, also remember that reconnects us with the 87.5. We did get the close below 62.5, so probabilities still favor a retest of those levels. And then below, this is where it gets interesting. Below this 10,700 level, you don't have much until 10,484, so 10,5. Could get interesting to the downside. Well, thank you. I am trying to get out of Chicago. I know we spent a whole 24 hours. It was longer than that. It's closer to 36 without the temperature where I live getting above zero. Not above zero, not a single reading above zero. And that's not including the wind chill. Wind chills were down below 40 below at one point. So we'll check on the spies in a second, Chris. Hey, was it 661? Happy holidays. So this week is a rally week. There's about a 65% chance historically that it's been a rally. All right. But it's very varied. It's not like, hey, you can say it's a 3% rally, a 4% rally. Technically, anything where we open and then it closes higher than where we open tonight would be a rally. I'm waiting. The only thing I'm looking for are these double patterns. So we went over that. We only have the shorter term one on the NASDAQ. The Dow does have a valid double, and the Dow did close above the 62.5. And the rotation zone is out of the way on the Dow. But to trigger the bigger double is 33,663. 341.52, and then I'm focusing on about 374. Those are my two major targets. We start breaking back down below 32,975. My major target area will be the flat 200, and we have a harmonic cluster there. So right around 32,400 would also take us back below the 50. Russell, yes, not a close above the 62.5. To trigger the pattern needs a close above 1798.10. Then we got 1831.80, and look at the second target coming in right in line with the end of the clear path move, the 200, and the second target 1848. So those are the targets I am focused on there. On a closing basis, I am focused on the close from Monday. Why? We get a close below that. I'm starting to target the breakdown area, and the first major area is about 1708 to 1714. We're going to short the rally then? Well, I wouldn't be shorting if the doubles trigger. I would not be shorting them. I will be watching the reactions once we hit some key levels, and if we set up for a short position, there could be a nice potential trade, but also it's, that could take us through the end of the year, and then we got the January effect, so we'll have to see where everything lines up. Trust me, I have no idea how I live here either. It stinks. The DAX breakdown area 13,900, and then we go to 13,771, 13,650, 200, 13,574, and cluster at 13,525. There is no double. The DAX does not have any great setups besides the potential breakdown play. Why? To the upside, you're into the rotation zone. Targets I'd utilize is about 14,155, and then we have a breakdown zone 14,260. So the DAX is low on my radar. The notes, I'm watching for continued to follow through to this 50% level, 112.03. On any rally, 113.24 is key resistance. I know we'll get to the spiders and the Qs in a second. The dollar index still has a potential double on a close above 104.53. But if we break down below 103.60, we're going to retest this low area then, probability-wise, and then the double would be off the table. The weighting momentum has definitely slowed down, as you can see. RSI back to neutral. Cycles at the top, though, on the daily, but still room to run up on the weekly and still oversold on the weekly. Also, look where that double, if it does trigger, takes us on the weekly back to the weekly rotation zone. So I would pay very close attention to the dollar index. Why? If it breaks down, it's supportive of a rally in the financial futures and therefore the stocks. If this triggers, we could see that downward pressure on the financial futures and stocks. And also if it triggers on the daily, it takes us back to the daily 200 virtually. VIX is garbage right now. Besides, here's your fear mode. You still have the double that could trigger. Nothing's been invalidated. Now, if we get a major pushback down, but here it is, this nearly invalidated it, but with the strict rules, I am still watching it just for the fear mode to kick in if that were to happen. Crude, the only thing I'm looking for, besides we hit off the 80-26 harmonic from the reverse harmonics, we still have a potential 1 hour, a 1 hour, and a 4 hour double top. So that's the only thing that takes me short-term bearish is on at least a 4 hour close below 77.03. I would just use 77. 75.60, 74.88, 74.16. Okay. I'm still watching though. We got some major overhead resistance at the next harmonic and 50%. The next harmonic and the 50-day moving average. By the way, we trade up there. The double is invalidated. Now, why don't we get to the spiders? The spiders, as I said, this came down close enough for my target area given the nature of these markets right now. Let me just, we roughly know, 373.28. I'm going to put a line here and take off all these extra. There we go. I'm going to take off some of these extra so we unclutter the chart here. The spiders did get the close above the 62.5, but that just favors a return to roughly the daily rotation zone in 385.86. There is no double. My major target area, we still have a gap fill and the 50 EMA. That's the key area on any rally that I'm watching for in the spiders. The closing is 389.63. So, and you have another gap fill between Wednesday to Thursday. So, we start, now this could be, we could gap up again theoretically tomorrow and fill the gap with a gap and leave another gap behind. Remember, a gap can fill a gap. But your short-term targets, besides this 385.83, then you'd have between the 87.5 harmonic and the 100% harmonic, you have the closing price, 386.22. So that would be my next target area. By the way, do not ignore right in front of this, especially for raising stops. You see this really strong support shelf? I would definitely use 385.55 as a stop raise going into before that close. Those are your key targets. The upside to the downside. At this point, the best with this long tail from Thursday, key areas would be 373.40 and 371.50 on any breakdown play. On the Qs. The Qs in the short term, let me clear a little of this off just so we can clean it up a bit. On the short term, I'm watching Friday's high. Above Friday's high, we're utilizing, you see here's the 50 to 62.5, and you have the potential fill to the gap down open. I'm going to be focused on 270.15 to about 270.50, or sorry, 270.39. Then we start getting into this area. We have a gap left behind. The 87.5 is 273.24. The full gap fill is 273.50. Sorry, 273.24 to 273.50 are my next targets to the upside. Especially if we close like tomorrow above 270.15, that's my key target area. To the downside, we break down. I'm focusing on Friday's lows, anywhere about 263.30 to 246.26, and then want to break down 259.60 is my major target, and that takes us back to the 87.5 key harmonic and this low area from Friday, November 4th. About 80% down last few days of year, went down on year by greater than 10%. Last one was 2018, and we was up the last few days of 2015 and 2008 down. Remember, we also had the sell-off going into 2018, and we did bounce right after Christmas. But again, that's why I'm waiting for patterns to trigger. Otherwise, it's just sitting there. Gold still has this horribly sloppy potential double I'm keeping an eye on. Silver, we do have a potential double top. Needs a close below 22.73.5. So keep an eye out for that. Uh, Currencies, we went over the dollar index. US dollar Japan just forming a flag back into the breakdown zone in the daily rotation zone. So I'm watching for the next rollover play there. Euro, inside bar on Friday. It's either a short-term breakdown by about below 105.80 or a breakout above 106.60. Other than that, nothing. Pound, still watching for a pullback to 119.20 exactly. Bitcoin's gone to sleep. Tesla, watching for some kind of bottoming pattern coming in. If we do break down, next key targets aren't until 112.83 to about 107.60. I'm watching if we do break above Friday's highs for a follow through, potentially back to 140. What do I think about longing shares of UVXY? I'd wait. Yeah, I think we could be signaling a move lower by, especially towards the end of January. I think we're going to get some pretty decent sell-offs in the first half of the year. So that is what I am prepared for. Let's see. I think that's about it. Amazon, remember, bounces in these takes us to key breakdown levels. So a lot of these still are technically in not good positions, even on bounce plays. Amazon, you see, even below major support. It is getting to the cycle bottoms with oversold, but bounce plays, I'd just be watching back into the, especially the weekly rotation zone for another shorting opportunities. Apple. The Apple's the only real interesting play because you do have a potential double bottom, but it needs a daily close above 136.81, so that's a ways off. But that's the only thing I'm watching on the radar screen from a higher probability pattern. Right there. There's just Microsoft. Remember, we got some key technical damage, but it's just rallying into overhead resistance. Not any great setups there. So even if we get a rally in a bunch of this stuff, it's just not some great trading. Google would just be a rally back into the daily rotation zone. It's a little upside in Google before the next rollover play. Still watching for the reconnection between the 87.5 and 100 though, so it'd just be a setup for another rollover play based off the probabilities. All right. I think that's about it. We're going to keep it. Oh, let me peek at NVIDIA. And even NVIDIA, nothing on Friday, but this Thursday was very interesting. And Friday also, anything to hear would be a return for another short play setup potentially with NVIDIA. So a lot of your bigger stocks people are trading besides Apple, and Apple hasn't even triggered the double bottom yet. So yeah, we could eke out a rally, but yuck. All right, I'm going to let every peek at Nat Gas, and then we'll call it a day. Again, thank you for being here, spending a part of your holiday extended weekend with us. I really appreciate it. Nat Gas, I'm watching for a bounce play in Nat Gas based off of key support. But if we get a daily close, your early warning sign is a close below 495. And then you get the close below the lows from October 24th, that week, the lows. Your look, which is 475. You get a close below 475. You could see a rapid return to 376 area, the weekly 200. So, could get interesting. There is a %B buy setup on a break below Friday's high with a daily close back above it, but that's a return to the rotation zone only. And it gives you a really nice tight stop area. So you could play with pretty decent reward to risk, because that's playing on the most recent low area holding. That's the only thing. But if you turn around and break below this, then I'm saying we target the 200 weekly. So that's your only short-term aggressive bullish setup. Again, I cannot stress enough that you keep from my perspective, it would be keeping a very, very tight stop if you were trying to play this to long side, because any rollover, I'd be going with it to the short side. What are my longer term lower targets for Apple? My longer term lower targets, I've talked about this before. Let me get in here. My longer term lower targets, my next key target is, you could use 118. Technically 117.67. And right below that, you have 114. This would be my target area, 114 to 117.67 on the next rollover play. Why? It's the 50% retracement from the COVID lows run up. Then we have the key area. All in here is a key area I will be watching for a more significant bottoming pattern. Even back down to 101.54. All right. But this 200 on the weekly is going to be very key on a closing basis. I will do one. Yes. Tomorrow is green. If I had to guess, without any news coming out, I would say if I'm taking a bet, if you're saying, are you betting on red or green tomorrow? I would have to put my money on a green day. Nothing has come out. There's not a lot of economic releases. I'd have to bet. But my thoughts, you do not play as a position. That's why I need setups. I will be watching the overnight session pretty closely tonight. Warmer weather predicted. Nat gas might go kaputs. Maybe some puts on UNDG into the spring. Well, I bet you we'll have more severe cold snaps. But yes, they are predicting. Look, we should hit in the northern suburbs of Chicago. There's predicting what? Thursday to hit 50. So we will be going from, with wind chill, from minus 40 to 50 degrees on Tuesday. And without wind chill, I think we got it down to about a minus 10, 11. You know, but that's a huge swing. Let's just call it minus 10 to 50. That's a 60-degree temperature swing in under a week. So we're expected to get some or warmer, and then rain associated with that. And I bet you we will have a couple more cold snaps. But there's a lot of more temperate weather forecast, especially for the Midwest and the East, which is digging out from this brutal, especially the Northeast, from that brutal storm to hit Buffalo. And we're going to warm up. So you could see nat gas break lower. There you go, Ted. All right. I'm wrapping it up for now. Everyone have LNG plans staying offline. Yes. I did not see, is it now mid-2023? Because then they can't export any nat gas. So it just increases the supplies in this country. So that could also be downward pressure. So that's where, if we don't trigger that %B buy pattern, we could easily roll down and target that 200 on the weekly. All right. Thank you all for being here. Well, I'm glad it's summer. You are obviously below the equator. That enjoy your summertime. Thank you, Connor. Everybody have a wonderful rest of your evening. I will be back at 8 a.m. Central Time tomorrow morning, and we will analyze the overnight price action and see how we can position ourselves to take advantage of it with some additional price action, which is well needed since it's sort of in no man's land. North Africa. Well, there you go. Enjoy your time. Thank you for tuning in, Mr. Hamza. Sorry if I pronounced it wrong before, Mr. Hamza. You are welcome, CD. It's always good to see everyone here. Thank you again for tuning in on your extended holiday weekend. Bye for now.